Well, hello everyone. Welcome to Getting Started with Technical Analysis. This class is all about understanding how stocks move and how an investor or a trader might be able to make more informed decisions with their portfolio or with placing a trade based on recognizing certain chart patterns. Today, we're going to talk about channels, so that type of pattern. We're also going to talk about trend reversal patterns. So we're getting into the world of cup and handles, inverted head and shoulders patterns, double tops and triple tops. And if you don't know what any of that means, that is perfect. You're in exactly the right place. So by the end of this 45 minutes we have together, you'll be saying, I now know what a double top is or an inverted head and shoulders, and your posture will be a little different. So my name is Barbara Armstrong. I'm a coach with Schwab. I invite you to follow me in the land of X, formerly known as Twitter. My handle, Barb Armstrong CS. We also have the privilege of having Mr. Ben Watson with us in the chat. If you've ever attended an in-person event, you've probably had the pleasure of meeting Ben, and he's fantastic. So you're going to want to follow Ben as well because he's posting lots of fantastic content on X as well. His handle, Ben Watson CS. So just before we get into the kind of thick of things for today, know that everything that we cover in this introductory level class is for general information purposes only, none of it to be construed as a recommendation or endorsement of any particular chart pattern or investment strategy. Know that options do carry a high level of risk and aren't suitable for all investors. And we are going to use the Paper Money software application on the Thinkorswim desktop platform. Isn't that a mouthful? There are some nuances and differences between a Paper Money account and a live account. We'll discuss those as appropriate. But this is a great place to learn, to make sure you understand your trading plans, that you understand a strategy and how to place a trade on the platform before you consider doing that in your live account. Okay, so the last 2 weeks we've been talking about price patterns. We've talked about flags, and then we've talked about pennants and triangle patterns. Today we're on to channels and reversal patterns. So we're going to look at what those price patterns are, how they're formed, and then we're going to go out to the charts. And I've got about, 15 charts that I would like us to look at. So I want this to be participatory. And so, flex your fingers, move your beverages out of the way so you don't end up spilling anything on your keyboard, and, get ready to participate. And then we'll place an example trade as well. I just want to say, as we kick this off, that I really appreciate all of you who, whether you watch this in the archives or come live, but for those that are here live and in person, it's really awesome to see you being so participatory in the chat, both during the class and, before it even starts. So to Marcus and Krishna and Sia and Jay and the rest of the gang, thank you all for being here. Okay. So price patterns, just in case you missed the last couple, these occur because there are, horizontal and or diagonal support and resistance lines that create common shapes. And today we're going to look at rectangles. Last week we looked at triangles and wedges, and we're going to look at trend reversal patterns. And so each type of pattern has a unique construction that forms over a given period of time. And the way they're constructed can give a trader an idea of when to potentially enter a trade and then how to establish a potential price target to exit that trade. And what kind of time frames are we referring to? Well, it can really be any time frame. You can be looking at a 1 day, 1 minute chart and we can see patterns. We can look at a 1 year daily chart. We can look at a 5 year weekly chart and everything in between. And we'll see these price patterns in all kinds of time frames, short, intermediate and longer term. And, some patterns can generate those entry and exit signals that I just referred to. And sometimes we can use those for swing trading targets. We can use them for trend trading targets. We can, it can help us identify trend reversals, all kinds of great things. And that's really why you come to a class like this, so that you can make more informed trading or investing decisions, because you have a better understanding of what you're seeing when you look at a chart. Okay. So let's look at the first one. So this is called, some call it a rectangle, some call it a channel. I tend to call it something going sideways, or, a whole lot of nowhere, is what you'll hear me sometimes call this. And it can happen in either an uptrend or a downtrend. Sometimes when something moves up really quickly, let me just get my drawing tools here. When we see, I was posting stuff, a cup and handle pattern, can you tell, on X just a bit ago. But, we see something that's had a really big push to the upside. And I kind of think of it as cycling up a hill, and you get to the top of this hill and sometimes you just want to coast for a bit. And so, we see this stock that's been kind of coasting for a bit or going sideways. And it's in this sideways range, this red line acting as the ceiling, or to use trader speak, the technically appropriate term, they call it resistance. And then the floor, which is called officially support. And what a trader might be looking for is for it to break either to the upside above this resistance level, or break to the downside below this support level. And if it breaks to the downside, what would we call this pattern? Go ahead and type that into the chat if you recognize this pattern, where it's come up and hit its head 3 times at a similar level. And if it, now this, in this example, it broke to the upside, but what if it had broken to the downside? And while you're busy typing that in, if we wanted to put a target on it, what some investors might do is say, okay, this range is, let's say it's $10 wide. So if it breaks to the upside, I'd expect it to go up about $10. Or if it breaks to the downside, I'd expect it to go down about $10. Yeah, you guys, you're a bright bunch. Yeah, like this is a triple top, because it's come up similarly. Now, somebody said head and shoulders, and you're close. If it had been kind of more like this, then this would have been the head, and then these would have been the shoulders. But as it is, we've got, 3 kind of equivalent people all in a row. Okay. Now, someone said, sorry, for crying out loud. That's what happens when your products all sync together. they all start ringing at you. Someone else said a double bottom. And Gazelle, I really like the way you're thinking, because what Gazelle saw here is it came up and it kind of came down. It's kind of like a triple bottom, right? You could say, well, I only decided to look at 2 of the bottoms. And then it broke to the upside. And so we can look at it that way also. So triple bottom. And again, resistance is the same, support is the same, and we're going to measure how far we think it's going to move the same way. And what's the difference between this triple bottom and the triple top is that it broke to the upside. In breaking to the upside, then you might say, okay, I see this as a triple bottom as opposed to the triple top if it had broken to the downside. Okay, but in any event, this is a rectangle pattern. Okay. Ben is going to be at the Detroit workshop, and I had asked to be assigned to that, but I'm going to be on vacation. I'm going to be playing with my friends in New York City, so I won't be at the Detroit workshop. Kevin Horner will be, but I will be in Chicago this weekend. So I'm sorry that I'm not going to be in Detroit because I lived there for 20 years. So it would have been kind of like going home for me. I lived in the Metro Detroit area. Okay, so here is that double top that we were talking about. And again, it was in this range, but for a shorter period of time, it came up and hit this top twice, or this resistance level, and then this bottom, it kind of came and kissed that 3 times. See our double top here? And then it broke to the downside. And again, how might we measure this range? Well, let's say this is 20. Then we'd anticipate a move of a similar amount. I'm just trying to eyeball it here, for it to move maybe $20 to the downside. And in fact, it looks like it did that, didn't it? And then kept on going. And this is not an exact science. And sometimes what could happen is it could come down here and looks like it's breaking out to the downside. And some traders might think, this is going to the downside and place a trade. And then it turns out it wasn't really a breakout. It was a fake out, and it could come back in and create a triple top. And wouldn't be the first time I saw that happen either. And so you want to have some guidelines around when you decide to enter a trade, if you're trading these patterns. Or, just if you've placed a trade and it then goes against you, you want to have some guidelines on when do you admit that it didn't go according to plan. Okay. So, our entry on this would be when it breaks this support level. And so the first day you might think, because support and resistance are ranges, I'm going to wait and see if this continues down. And you would have had that confirmation on the second day. So the entry is a break of support, and the potential target is, taking support and resistance and subtracting them from each other, or the width of the channel. Okay, and this double top, which is considered bearish, comes at the end of an uptrend, or signals perhaps the current end of an uptrend. Okay, now this is a double top. What other type of pattern could this be? So, and I don't have pictures of all of these, so let me just quickly draw them here. So, and we had one that we talked about, so we could have a triple top, couldn't we? Yeah, or could we have a head and shoulders pattern where it doesn't go, the shoulders don't go all the way up to the top of the head, but they come down to a similar support level, and then we're looking for that break to the downside. So double top, triple top, head and shoulders, all of these patterns, we'd measure a target the same way, and we'd look for an entry the same way. And the construction, it's the same in that it's following an uptrend. And this time frame can be any time frame. Yes. I had a cheat sheet for chart patterns, and let me see what I can find, because I'm pretty sure Ben has one for his technical analysis class. And, Ben and I will both post that on X when we come up with it, okay? So I like your question, Greg. That's a great question. And yes, I'm sure that there's one somewhere that I can scare up. All right. Okay, so this is our double top, triple top, head and shoulders patterns. Like I loved having those kinds of resources. Ones for candlesticks also. And I posted one for candlesticks, but I haven't posted one recently for the patterns. So here's a double bottom. So it's kind of flip it and reverse it. So where the last one was bearish, this is what? Well, it's bullish. Okay. So this is bullish, and we're looking at something to come at, you know, when we have a stock that's downtrending, and we're looking for this type of pattern to be established. And so resistance, it's coming up and hitting a similar level of resistance and a similar level of support. Now, similar to what I just did, you know, any time frame follows a downtrend, and what we're looking for is for it to break to the upside. Okay, and I just posted one on X where we have I think it was a cup and handle pattern. So another pattern that we might see is a cup and then a handle. So it's like a one-shouldered person. So here's the cup, here's the handle. And how would we measure the breakout? The same way we would for double bottom. So if this is 10 and it breaks to the upside, we'd be looking for a move about $10 to the upside. The same way we would here, which is why sometimes on Twitter, and I know on X I did this today, you know, I make a note of the range. I forget which stock it was. We could go and look, but the range was 11. I do remember that. And you know, and so we'd be looking for about a $10 move to the upside. Now, the other pattern that we might see, here's our resistance, or sorry, here's our support and here's our resistance, is an inverted head and shoulders. So somebody who's hanging by his heels. And then we're looking for that to break to the upside. I don't have a script for a cup and handle pattern. I tend to just look at charts that are heavily traded. So I might bring up the NASDAQ 100 and link my chart to my watch list, or bring up the Dow 30 or the S&P 100. And it's amazing how quickly you can click through charts and look for patterns. Okay, and you know, our entry here, is it breaking resistance to the upside? And again, we're looking to measure this distance. We're, you know, support and resistance. We're measuring this distance and then adding it to the resistance level from which it broke out. Okay. I like your questions, guys. Oh, just a second. I've got to get rid of my drawing tools here. Okay, so let's go look at some examples on a chart. And we can start with, let's start with a couple of sideways charts. And if you come to the getting started, oh, David, you went and looked, didn't you? Yeah, so like if we bring up X, you know, and in the pin post to the top, I have some scripts that I commonly use. I also have my schedule for the week. And if I'm subbing for someone, I will often kind of put that in there as well. Oh, but sorry. Yeah, here's the one that I had just posted. It was Newmont Gold. So gold hit a new all-time high today. And so you might want to look at some gold stocks. This is just one, and see if it might be breaking out. Now, I will usually put an arrow with a breakout, but we aren't seeing a breakout yet. So, you know, I just said it's flirting with a breakout. And so you might want to just put that on your, you know, list of stocks to potentially look at for an example trade. Okay, so if, I was starting to say, if you come to the trading a smaller account class, we have had noticed in that class that this stock was downtrending. And then in September of last year, it gapped down on earnings, and it's been trading in this range between about 60 and 77 ever since. And so, you might say, well, how do you trade something that's busy going a whole lot of nowhere? Well, in that class, the way we decided to trade this range-bound stock was to do something called an iron condor, which is where, let me change my drawing color, where we sell a short put vertical at or below the support level, and then we come up to the resistance level and we sell a short call vertical. And a short put vertical is successful as long as the stock stays above your strikes. And the short call vertical is successful as long as it stays below your strikes. And so if this stock continues to do what it's been doing since September, then you'd have a successful trade. And so that's one of the ways that we can use options to benefit from something that's going sideways. Now, what else could an investor do? Well, an investor could say, well, I'm going to buy shares of stock when it comes down here and bounces off a support level. And then when it gets up to the resistance level, I'm going to sell those shares. And when it comes back down to the support level, I might buy again. And my plan is to sell when it comes back up here. So as a stock investor, is there a way you could trade something going sideways? There could be. It requires a bigger capital investment, but if you have the money to invest, all the more power to you. So that's Dollar Tree. How about Micron? So this is a tech stock, and this stock, as of July of last year, now we can see, and we did the same type of thing, and we're now, I can take these off our charts because we've exited, that position as well. But, it came up and in the neighborhood of this resistance level a number of times, didn't it? And then it started waning a bit, like it came all the way up. And then I drew this kind of diagonal line because it's not been getting quite as high, has it? And then here was our support level. And it's come down to this support level, like 1, 2, 3, 5, 6, 7, 8, 9 times. And the more times it comes, and hits a support level, I almost see of it as a row of medieval knights. And every time it comes and bounces off either the ceiling or the floor, it seems to me that it's, it's got more reinforcements. And these are not finite numbers, support and resistance, they're a range. Okay. So that's Micron. How about MET? This is oops. And so MET, this is following an uptrend. And so, could this be a double top setting up? It could be, or a triple top, because it's come up 3 times. And what would we be looking for if this was a triple top is for it to break to the downside, showing that this uptrend has run its course and we're now looking at a correction. Or could this be, a double bottom setting up, and then could it break to the upside? And the answer is we don't know yet. Right now, it's still busy, kind of going a whole lot of nowhere. Where we've got this resistance range up here, and then we've got this support level that it's come to, and in this neighborhood a few times. And again, so some might have looked at this recent activity here and said, ooh, that looks like a break to the downside, but did it turn out to be a break out to the downside? Turned out to be a fake out. And so, you know, these things happen sometimes, right? Let me just erase that first. Okay, let's come and look at a couple of bearish potentials. And one is CMG, and this kind of surprised me. But what pattern do you see on the charts? Yes, we did close our trades prior to expiration on those iron condors. So what do you see, you know, the patterns that we've been talking about? On this particular stock, a couple of weeks ago, we were talking about bull flags and bear flags, and we saw this bear flag, you know, a series of bear flags here, and we placed a trade, and it did end up hitting our target. And we had said, you know, we could look at a swing target or a flag target. And that trade is now complete, so we did that trade in this class a couple of weeks ago. Yeah, head and shoulders. A head and shoulders pattern. Absolutely. Yep, you guys have got it. So when we look at this and we say, okay, I see this head and shoulders pattern. There's the first shoulder, second shoulder, you know, and this went from 55 to 66. So what is it? Today is sponsored by the number 11. You know, here's another range of about $11. And so what might a target be? Well, we might say 55 minus 11 is 44. So a potential target might be 44 for this one. And, you know, it hit our target. You know, I think we did a swing trade. So it hit our target here, but, you know, we might have done what I call a wash, rinse, repeat, you know, because another bear flag pattern set up and we could have traded that same type of pattern again. Okay, so that's a head and shoulders. Now, how about workday? And this is a little sloppier, but what do we see on workday? And, you know, this is, you know, it came up and hit this high, but it only hit this high once, right? Right. And then it gapped up after this earnings back here in, it looks like it was August or September. And then it came all the way back down and kind of closed that gap, which, you know, is not that uncommon. And then it came up and hit a new high here. And then it came back down. And then it came up again. So this isn't the tidiest pattern. We're not going to put this in the dictionary beside head and shoulders patterns. But might some see this as a potential head and shoulders? Now, what hasn't happened with this yet? What has not happened? So it's been trading in this range between 234-ish and 292. But we haven't seen it break out. There's no breakout yet. And so we might just keep that on a watch list because we're seeing no breakout below support. Yes, it is an ugly head and shoulders. It is like the red-headed stepchild of head and shoulders. No, you know, not that I don't love redheads, but, you know, it's not the prettiest, is it? Yeah, and Marcus, you've got it. There's no breakout. But we see this pattern forming, and sometimes they follow through and sometimes they don't. Okay. So let's look at, I know I posted this one on X a few days ago, but let's go to the other side and look at AEP. Now, what do we see when we look at AEP? And I've left some of these to draw the lines on because, when the lines are already drawn, sometimes it just seems, like easy peasy lemon squeezy. But, some might look at this and call that a head and shoulders. Some might call it a cup and handle, right? Yeah, somebody's saying they need to see the chiropractor. Yeah, they're a little lopsided. But, could you see that as either an inverted head and shoulders with a range here of about 12? Or some might say, well, you see that. I see this part is a hot mess, so I'm not even going to take that into account. I'm going to call this a cup and handle. Well, you can call it whatever you like. How are we going to measure the range? Exactly the same way. Yeah, and then so what might a target be? Well, if I take 102 plus 12, it would be around that 114. And and this came up and came back to retest. Is that unheard of? No. It's not uncommon. And in fact, it came up and then it retested again and it's now moving up and it's at 105. But, if we're thinking like, oh, this could continue to move up, what might a target be? It might be 114. So, could we buy the shares and put in a target at 114? We could. And so if we wanted to do that, where might we put a stop? Well, we might say, hey, I see a support level here around this 102.61. So if I were to put a stop in, here's my target, 114, stop would be at that, and let me just erase this. So if we bring up our little calculator over here, and you may want to come over here, even though this is a technical analysis class, we did just have an earnings event and it's, it was after this earnings that it broke out. But, what do the analysts think? Well, they're raising the price target to 106 from 93, to 107 from 98, to 114. So is all that good news with respect to a bullish trade? Also, if we look at the Analyze tab, this is a utility stock. So might it just be, if we were to look at the sectors, that utilities as a sector might be strong? So if we came over here and looked at the sector indices, and I've got description in here, and we looked at over the last 3 months, what sectors have been strong: healthcare, utilities, energy. So this has been a stronger sector. And, some might want to start by looking at the charts. And then when they see something that they think might be interesting, then they might want to come over and look at the news on it, and then look at what sector it's in and look at how that sector is doing as well. Okay, but if we bought this and then said, okay, we're going to buy 100 shares and we're going to put in a target on this. Oh, sorry, I came over here because I was going to add a calculator to the mix. Can move that up. And so we're going to take our 102.61 and say, hey, if it goes 3% below that, now you may want to make it 2%, you may want to make it 5%. This is just, a guideline. Then your stop would be at 99.53. So how much are you risking if you buy 100 shares? Well, you're risking, about $6 a share. And what's your target? At 114, you're hoping to make about $8 or $9 a share. So, your reward potentially is greater than your risk, although there's no saying that it'll ever come up and hit 114. And there's also no saying that this stock couldn't gap down and we could end up losing more. But that's our thought process. So we're going to make both of these good till canceled. We're going to put in our stop at 99.53. 99.53. And our target is 114. And then we're going to put that in our trades with targets, stocks with targets. And this is based on the cup and handle pattern. Yeah, so somebody's saying, you know, do you want to buy a prenup? It sounds, Wiley, like you've been watching Mr. James Boyd. So that's another thing that we could have done. And this is not a very volatile stock, as you can see. So we could have come here and for 60 cents, instead of having our stop loss at 99 and change, we could have spent that 60 to 75 cents and bought a put. And when we buy a put, we have the right to sell the stock at 100 at any time from now until expiration. So that would have been another viable choice for us. Yes, and they call that a married put when you both buy the stock and buy a put at the same time. Okay, let's look at another one. So let's look at Vertex. Now, this is a pharmaceutical stock. Healthcare stocks have been doing well. And, you know, do you see what I see? Now, some might say, well, hey, it came all the way up here. Others might say, if I was looking at a shorter term chart, I kind of see this inverted head and shoulders and it's already broken out. Others might say, well, you may be doing that, you know, and do you see this inverted head and shoulders that I'm referring to here? But it did come down. And, you know, that's part of a trend reversal pattern, right? Is that this had started downtrending and we're looking for this downtrend to reverse. And so some might say, well, I see this as a valid breakout. Others might say, well, we're already flirting with this level. We're at 516. I'd want to see it go above here because this is a potential resistance level. And again, how would we measure this? Well, we might come from down here, you know, around this 400 to the 490 mark. And so that would say, you know, we're looking for a move of about $90, given that this has broken out. Okay, so that would be Vertex. Now, there's a couple that aren't quite there yet, but it's important to be able to see the signs so that, you know, we can watch it. And so if we look at Hershey, what might we be seeing here? And I don't know why all of a sudden this feels like I'm getting some shade on the chart. Let me just see if I can brighten it. That is weird. So if we look at this, I'm going to get rid of this line. And, you know, if we look at this recent bottom, it's here. But could this be either a cup and handle? Isaiah, you've got it. Yeah. Or, sorry, just let me wipe that, shake my Etch-a-Sketch, so to speak. Sorry. Okay, let's just get rid of that. I thought I hit camera instead of hitting. Oh, that's why. That's why it was shaded. Okay, so problem solved, mystery solved on that. Okay, so could this be another cup and handle or inverted head and shoulders? But, you know, this hasn't happened yet. And it might not happen. And it could come all the way down here, and then we're looking at a double bottom. So it could be months away from breaking out, and it may not break out. It could continue on down. So, but we might want to just keep our eye on this purveyor of chocolate. Yeah. Yeah, see, you were right. It was, my drawing tool was on capture an image, so that's why it looks shaded. Okay, so that was Hershey, Amgen. Okay, so now with Amgen, are we actually seeing, do you see what I see? And this pattern, I would say, is complete. We have a bottom now. Some people include the wicks and some don't. Like, this is your, how you choose to see this, right? But we saw that this level here, just let me bring up my drawing tool, was kind of acting as a support level. And then it broke down, came all the way down here and hung out here for like a couple of weeks, and then came up, and all of a sudden old support became the new resistance level. And so, we had this cup and handle. Yeah, AP 514, you got it. Here's our cup, here's our handle. 257 to 309, that looks like about $52, the range. Our range here. And so what might a target be? Well, we might add $52 and say, oh, our target's up here around this 361. Could be our target on that. And then this one, we did have a breakout. Did it come back and retest? It did. Isn't that interesting? Like, I find this stuff fascinating. And it came like right back down and into this, resistance range. And did it actually hold as support? It did. And sometimes, it looks like a breakout, turns out to be a fake out. This one looks like it's bouncing. And in spite of the negativity on the S&P 500 and the NASDAQ, this stock, it has continued to move. So, might one say, oh, I wouldn't mind buying shares of this stock and putting a target. What if you're saying, like, hello, this is a $320 stock, and like my pockets aren't that deep. Is there another type of trade we could do? Well, one, you could just buy one or two shares, but could you do something called a long call vertical, which is a bullish trade where you're buying a call, and because these calls are expensive, you might say, I can't really even afford to buy the call, let alone buy a stock, so I'm going to sell a call. So I'm going to buy a call here, and then I'm going to sell a call above it so that I can make a little bit of something if it goes in the direction I'm expecting it to go. Okay. So we're going to, and if you're saying like, okay, you look at charts all the time, how do you know this is a healthcare stock? If you come to the Analyze tab, we can see here that it's a healthcare stock right here. Okay. And they have a worldwide presence. Okay. So if we wanted to do that type of trade and we came out to April 17th, we said we want to be bullish, we could buy the 315 call, and that would cost us just over $1,000. And then we're going to sell the 320, and we'll be paid $770 to $825 for that. So we're going to buy, it's called buying a long call vertical. We're going to pay $2.73 for that. And in our trading a smaller account, our goal is to make 50% of, a 50% return. And so we're going to take our 283 and multiply it by 1.5 and say, hey, when this is worth, and we're going to do 2 contracts, so we're risking about 560. This is a pretty large account. First trigger sequence, right click, opposite order. going to say when this is worth about 425, we'd like to buy it back. So this will trigger an order to buy it back when it's, okay, when it's at 425. Okay, so guys, we are out of time, but we have done a lot today. We've placed 2 example trades, one where we bought the stock, the second one where we did an option trade, a long call vertical. We looked at several types of patterns. We looked at cup and handles. We looked at inverted head and shoulders patterns. We looked at head and shoulders patterns, and we looked at channels. So we did a whole lot of looking. I think you guys came a long way in your ability to be able to see these different patterns on the charts. I appreciate you coming and spending a little bit of time with me. Please hit the like button. It helps move this up in the trading algorithms. It also lets Ben and I know that you found this content valuable. Hit the subscribe button in the bottom right corner, and don't forget to follow us in the land of X. Thank you so much for joining us. We'll see you in a webcast coming up soon. Take care.